Alright guys, welcome to the multi-dimensional trading video series. This is video number 5. Today we're going to have a recap in this lesson on what we have went over through video 1 through 4. Talk about the nuances and put it all together on how to execute, and when you see it, you'll know it. So here we are with what we originally talked about in the very first video, which is break evens, right? So here, price runs down, comes back up, break evens. Okay, I'll go down to a smaller time frame so you guys can see it in detail. This was break evens because you see how it consolidated here. People purchased here. People thought they were going to continue the run on Bitcoin to the upside. Nice volume comes into here. It doesn't happen. They get flushed down, doesn't come back, they get flushed down. They're waiting for quite some period of time to finally get their money back. Here they are, break evens. So now, waiting for that period of time, mind you, we are at the top of a very violent run to the top on Bitcoin. And people are going to start taking profits. And once you see that dip, that market structure break, it's probably time to get out of your position. So we have people who purchased, we have people who want to get out of their positions, take profits. Break evens is where we go short. It is as simple as that. We enter when the price comes back up to that break even line. Because we know that most people, traders, institutions, are going to sell their positions there. The people who have fear now, are scared, or just happy to finally get their money back, they're selling right here as well. People who are watching the market go down and then it pops back up, they're taking profit there as well. But the point is sell pressure. That's what we're going to get at those break evens. So we get sell pressure on the actual asset. We know we can go short there. It's as simple as that. And then price goes all the way down, breaks down, makes like double bottom, right? Equal lows, a little bit of support here, runs right into what I put as the break even zone. And the reason why I call this the zone is because we're not targeting a specific area of lows like here. We're looking at this low, and I'm also looking at this low. And as you can see, when price ran up, it stopped right there, sold off a bit, and then ran up to the next group of people who also got flushed out. Because people bought here, and people bought all up in here, right? They have their stop losses and liquidity to the downside. So once they got flushed out, here we go, back to the top, into this zone. Everyone sells once more. Because now everyone is convinced it's over, especially the people who thought they bought the dip here. It's over. They get flushed out, finally get their money back. It dies. So now we move on to what I call the equal points of contact, equal lows, and equal highs, right? We have equal highs here. See that? Equal on a horizontal line. We have equal lows here. And it clearly reacts just about the exact same. It's like they correspond with each other. when price comes back up, we know we're not looking for a break even area because this is slightly different. Although it did short at what break evens was for this small run, right? If you can see how people consolidated in here and then it flushed them out, comes back up, short right there at break evens, right? Those buyers turn sellers or support turn resistance, right? This is what we're looking for to determine quick trades. I just like looking at it on a larger time frame. So same thing with correspondence here. We knew it fell here before at this point in time and space. So when it came back, you can also take the short, runs down the same amount of time, the same amount of length in price, and then bounces. Just like it bounced here, it also bounces here. Now, what happened when it got up here? It stopped and fell. Now, what is it doing right now on that high? It's stopping and falling. They correspond over and over on the chart. It's really easy to see once you practice and back test and you basically do it consistently. You're going to understand that this happens over and over on every chart. It doesn't really matter if you hand me a crypto chart. If you come in our Discord and you hand me a forex chart, a euro dollar pair, an Aussie dollar pair, or gold, or some type of futures, oil, commodities, stocks. It doesn't matter. We're going to find these setups on every single chart. The correspondence on these equal highs and these equal lows happens all day long. Okay, this never stops. This goes on all day long. Um, Even when it touched down here, the corresponding angle to this top, see from here, 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 top, top, fall, because it corresponds with here. It's falling here because it corresponds with here. It it is what it is. It happens over and over. Now we have the bubble on top, right? This is the example of showing you guys the bubble theory on top instead of looking at it on the bottom. We're looking at the bubble on the top of the run, looking for where liquidity is to the top side. Right? It does not have to go there, but if and when it does, we know where liquidity is. I draw the horizontal line from this high to this high. I draw my bubble basically along the line. At the top of this bubble is where liquidity is at. That is where liquidity would stop, most likely stop. Okay. Just to reiterate the highs, look at that correspondence. Falls here, falls there. And if you take a horizontal line, you're going to be looking at equal highs. This is live, guys. We're doing this live. This is not um, replay. I don't even know how to do a replay on the trading view chart. I'm gonna have to look that up. But everything that I show you, it's live action. I'm doing it as we're talking about it. It's really not hard to see anymore. It's simple. Um, I know I got a lot of markups on this chart. I just wanted to reiterate everything that we went over just to show you how it works. Now, some of the nuances I guess I could talk about now. if we're taking short trades on break evens, we're doing it when it's at the top of a run, right? It's run for a while. We're not doing it at the bottom of a run. At the bottom of a run, these break even points, if you see them, would be our take profits. So, like this right here. See how it ran all the way down here? And then this is a break even point for these people right here. But we're not going to short it. We could, but we're not going to short it because we understand that it's ran down for such a long time. This would be a buy, and this would be our out, our take profit into break evens or resistance, right? Because that's where you would find resistance is where people finally got their money back. That's where they will resist the price. And then also at equal highs. It fell here the last time. It also fell there the second time. Okay. Bounced off of this low last time. Bounced off of this low this time. Fell at this high this time. Fell at this high the last time. Correspondence with the equal highs and the equal lows. It's something you can't deny. You look at every chart. Um, it's the easiest way or the simplest way to find out what the market is going to do, how it's going to react when it gets to a certain point in time, price, space. It's as simple as that. Now, as far as this bubble, this is the same bubble, just like we did on video number 4, where you're going to find liquidity at the top of the bubble. That's where we want to get in at the top of the bubble. If this was a long position, we want to get in at the bottom of the bubble. It's as simple as that. Okay. I want to get in at the top of the bubble when I'm trying to go short. Because liquidity is here. Look, it's one big bubble suppressing the market, right? Just like that big bubble on video number 4 was propping up the market. This big old bubble is suppressing the price. Look at it, suppressing the price. It's like weighing the price down. Eventually, it's not going to be effective anymore at weighing the price down. Then it's going to get popped. So all these bubbles get popped. Now, even if price didn't, for some reason, go up there, if it did, though, we know where liquidity is most likely at. It's resting at the top of this bubble because we can only draw this bubble pretty much as large as that trend line allows. Right? We can't really get any further than the projection of this trend line. Trend line is slanted this way from this high to this high. We can only really take our markup and draw it along the trend line, then start to curve it off, and we pretty much get this shape. That's as simple as it gets. And at the top of that bubble, that shape that we drew, that's where liquidity rests. It's a very simple thing to practice and try, and it doesn't fail. It works over and over. It's where we find liquidity. This is a big old bubble. Every market has one. It either has a bubble to the top or it has a bubble to the bottom. Price is either suppressed or price is propped up by this bubble. This has been video number 5, guys. Like, subscribe, back test, demo account. Remember, this is not financial advice. You guys will always be able to go and get a demo account, TradingView, MT4, MT5, or whatever trading platform you prefer, CTrader, and demo what we're saying. The markups will be best with TradingView. To be honest with you, if it wasn't for TradingView, I wouldn't have acquired the knowledge and have had the opportunity to practice the skills that we have acquired over the years. So I have to say that about TradingView. Um, thank you guys for watching This has been video number 5. I will see you in the next one. Video number 6 coming soon. Um, break evens, equal highs, equal lows, the bubble theory. Practice it. Go back through the other videos. You're going to see this on every time frame. Okay? Every time frame. You're going to make these things out. You're going to see them, and it's going to be recognizable. And it's the simplest way to trade. I don't have any special indicators. I don't have any fancy things or chart patterns. I really don't have to use any of those things or any of that stuff, because all I'm looking for is equal highs, equal lows, break evens, and I want to know where liquidity's at. Where is the bubble? Where is that bubble? That's all I need to trade the markets. That's all you will need to trade the markets. See you guys in the next one. Peace.